What's up, responsible day traders? Today is Monday, August 21st, 2023. I'm Lindsay Duff, and this is Responsible Day Trading. I've been traveling. I have been super busy. I did have Jason do our last video, but even that's been a couple of weeks, and I feel a little guilty. So we're here today. We've got some announcements. So we just wanted to, bring it back fresh and new. Definitely going to make an effort to be here more often. Next week, I'm going to be on a little vacation in Florida, but I'm bringing all my stuff with me. So maybe I'll greet you from the beach next Monday. I know we're out a little later than usual today, but better late than never. So what we're going to do is we're going to talk about the things that have been happening. I mean, we have seen a really decent push to the upside in the market, but it also has given us a pretty decent pullback. So we're going to try and read whether or not we're anticipating that to continue moving back, or if we're going to see if this is going to give us another bounce to the upside, possibly move us up to some new areas of support and resistance. So the first thing we're going to do is we're going to pop over to the Responsible Day Trading website, and we're going to talk just a little bit about the scholarship that we have coming up for Responsible Day Trading in October. Now, this is something that we do every year, and this is our third year. I used to just take on scholarship students just individually, but now we've actually set up a program where once a year, we are going to allow 4 students to come in as scholarship students with full access to the curriculum. So we're going to have 2 that are going to be VIP students and 2 that are going to be the startup students. With the VIP students, you're going to get all access to all of our curriculum, all of our coaching, everything, and it's going to be at no cost. And also, we're going to have 2 students who are going to come in as startup students, which means they're going to have full access to the curriculum and be able to learn what we do here and how we do it. So let's go over, check that out on the website, and then we'll move over and check out what's going with the news and the market today. All right, guys. So when you come over to the Responsible Day Trading website, you can see right here at the top, we have Apply Now for the RDT Annual Fall Scholarship. So you'll just click there on the Apply Now. We're going to have some information over how the scholarship works. So you can look through that, learn a little bit about what we're doing here, and how you can apply and become a part of it. So we are going to make a major announcement probably in the next day or so here, going over this just a little bit more. But if you wanted to apply now, you're just going to click right here and it'll take you to the area where you can fill out your information to apply for the scholarship. All right, but let's go ahead and move on over to the news. So if we're going to check out the market, we're going to want to go over to news. Then we're going to go to market news. Okay, this week, we don't have anything today. Tomorrow, 9 a.m. And remember, this is Central Time, so this will be 30 minutes after the market opens. Wednesday, we do have some pre-market, 15 minutes after the market opens, 30 minutes after the market opens, and an hour after the market opens, we have all major news. So we see these 3 bulls here. That means high volatility expected during those times. Now, in You Profit Trader, we don't have any rules against news, but being aware of it is always a good idea. So Thursday, we've got pre-market news, and Friday, we've got Powell speaking, which tends to move the markets a little bit, and that'll be 35 minutes after the market opens. So let's get into the meat and potatoes of things, and let's check out the market. Okay, so we like to start off with our daily chart here. So here you can see our daily chart. We do have a little information going back here from our other charts, but where we're putting our focus is right here. Now, we had a huge move to the downside in the last year or so, right? About the last year, it moves straight down. But since the beginning of this year or so, we have been seeing some movement to the upside. It's not strong movement, but it's definitely gotten us back above the EMAs and above the 0 line, which gave us a long bias, right? So when we pulled into the area right here that held originally, we could see, even though we were sitting at the 0 line, the MACDs were still showing strength down. So even though these EMAs were opened up, with the strength of the MACDs down, it told us to anticipate it to push down just a little bit further. So it did push down a little bit further right into this area that we have seen as a major area of resistance and a major area of support. So right now we're pulling right down to it and sitting on it. We still have the BBs outside of the Bollinger Bands. We can see those dots still outside. They're starting to get a little bit lighter. They are a little bit bunched together. So we may see them start to try and give us a slow and roll. Now, if they had a lot of distance between them, like we see in here, then we wouldn't expect that slow and roll so much. But one thing I like about anticipating the slow and roll to the upside is the strength of these EMAs. Now, does that mean it can't continue down? It absolutely can continue back down towards this area some more. In our movement from Friday, we got a nice little reversal bar here in the area of the EMA and the area of this support that we might be able to anticipate to hold, but we are going to need to see some slowing down here. We may see it pull back into the area, kind of something like this, pull back into the area and give us a couple of bounces off the area before it pushes up. My anticipations currently are still a little bit to the upside. My bias, my thought process is a little to the upside in the long run, simply because we've got this reversal bar, we have large EMAs, and we have BBs attempting to slow down. Now, I don't want to set my daily bias just by this daily chart. So just because it's given us a reversal bar doesn't mean that it may not still push back further. So we want to pay attention to what the bigger charts are saying for the overall, but we still want to pay attention to what the smaller charts are saying for the immediate. So we're going to move down to the 28,657. I would not call this one of our immediate charts. It is still a very, very large chart. It only creates a few bars throughout a day, but still it takes us away a little bit from that long-term bias of the daily chart and breaks it down just a little bit more. Now, if we're looking at the 28,657, bias has moved to the downside, and it happened back here when we got below the EMAs, back below the zero line. We had moved the bias back to the upside, being back above the EMAs and the zero line here and pulling away. But as soon as we got back below the EMAs, back below the zero line, and started pulling to the downside, bias was down. So what happened here is we had a nice big strong move to the downside, and we pulled back into the EMAs, which are telling us more down. Our bias, our direction, our momentum is still considered to the downside on the 28,657. And why is that? Well, we're looking specifically right in here where we haven't gotten back above the EMAs and broken away from it. We got it back above the zero line, but we didn't get back above the EMAs. And we want to be back above both the zero line and the EMAs. And we want to see price start to pull away from the EMAs, kind of like we saw in here, to even shift our direction to the upside. So technically speaking, our direction is still to the downside on the 28,657, although could it shift? Absolutely, it could shift. We'd need to see this price show the potential to move back above this EMA to pull back away. Now, we do see a couple little small price bars right in here, which tend to give us a little bit of that feel of the pull away. But what are our MACDs currently saying at this time? We have seen some separation between the BBs. We do see it trying to pull away a little bit. So I wouldn't just jump into any longs right at this point, especially if looking at our smaller chart over here on the side, which apparently is distracting me just a little bit. I wouldn't jump into any longs, and I might even be anticipating this to push back down. Now, one thing I do like about being back above the zero line here is that it does have the potential to work to shift the direction to the upside. We'd have to see these BBs slow down. We need to see it show the potential to roll off the zero line and push up here. With the small little price bars, we'd want to see it break back above the EMAs and pull us in a direction back above here. Now, when that happens, we're going to want to see the BBs also break back above the Bollinger Bands and create new highs. Otherwise, we're just going to have divergence at the area of the EMAs, which is going to give more weight to the push to the downside. So let's look at our immediate charts, which are 10,946, our 1597, and also going to be our 233. These aren't the charts that you have to use. You can use whatever charts you like. And these I'm using because they are specific Fibonacci numbers. They have a specific distance apart from them, which really sets us up for a good flow between the charts. And it really gives it some synergy and some connection. Now, you may want to put the 1597 here, the 610, the 233. That's great as well. Some people will use the 4181 where the 10946 is, and some will put the 610 where the 233 is, leaving the 1597 in the middle. That is fine as well, just as long as we're making good decisions in the distance of these charts and having a good connection between them so that there's an actual flow when we're looking from one chart to the next, that they remain connected between them. So right now, because we do have some pretty decent bar sizes and some pretty decent movement in the price, we're going to stick with the 10946, the 1597, and the 233. So for the 10946, let's start, and I like to read this like a book, left to right. Let's start with the left and see what it's telling us, what the 10946 is telling us about the direction and what to anticipate. So 10946 did shift the direction to the upside. It got back above the EMAs and it got back above the zero line. And you may be saying, well, Lindsay, it got back below the EMAs and back below the zero line here too. Is the direction shifted to the downside? And the answer is not just yet. And let me tell you why. One thing that we want to see happen when we're shifting the direction is separation from the EMAs, which we have seen here, the price bars separated from the EMAs. But after the separation, we want to see a close above the bars that pulled away from it. So here we can see, here's the first bar that pulled away from the EMAs to the upside. Here is the close back above the bar to the upside. So the direction shifted to the upside at this point when we got back above the EMAs and back above the zero line. But since we've made the separation from the EMAs here, we need to see a close happen back below this area to feel really confident that the direction has shifted to the downside. Now, does that mean we can't take any shorts before then? No, you can do whatever you want to do. This is your life. This is your trades. So what we see is rolling inside of the Bollinger Bands here. We have not seen the pushback to the downside. Now, we may look at our smaller charts and see the possibility for it. We pulled into the EMAs here. We pulled back into the EMAs here. We are seeing a possibility to push down now. But if we look at this price action right here and how the MACD reacted, we have some major retracement divergence between this price and this MACDs. It's almost divergent, but the price just didn't quite equal that bottom. We could call it divergence. We could call it retracement divergence. Either way, we can see that the MACDs struggled to reach down as far as the price, which told us potential for the push back up. Well, that push has happened back to the upside, back into the EMAs. But what we're going to really look for is, are these MACDs going to pop and go back above this Bollinger Band and show us reason to move back up to the next area? Or are we going to see these MACDs roll to the downside and push down? Currently, we're inside of the Bollinger Bands, like I said here, but we did come off of a really strong move in the MACDs to the downside. So we're going to have to see if this roll inside is going to be enough to push the MACDs up and push the price up as well. Right now, I'm a little hard pressed to see it push up immediately, especially because we came off of this big move to the downside. So we may see this try and come down and meet this area again. I kind of believe that if we do come down and meet anywhere down in this area, we are going to see a bit of divergence happening. So it may struggle to get through there. But as I said, even though I see the potential for it to push back up, it's a little hard pressed to see it happening right now. EMAs on our 1597 are wide and spread to the downside as we pulled back into this area. So we are at a little bit of a watch and wait because we're stuck between two areas that could create a bounce. And what are those two areas? Well, number one, we've got the EMAs here and we've got EMAs right here. Number 2 is the area of support that happened whenever we created the divergence down at the bottom here. So what I typically do in situations like this is I like to wait for it to break through one area and then pull back to it and then look for my movements, because it gives me a lot more confidence. So I do see this area right here as it's really attempting to make the push through. But one of the good things about having this tick counter right here is right now we have 1,000 ticks left on a 1597 tick chart. That means we could see major change in those 1,000 ticks. We could see that BB pop to the upside, or we could see it roll off and move to the downside. And as you can see, it looks like it's really attempting to roll off and move to the downside. So whenever that's happening, we want to wait till closer to the end of the formation of the bar to make a decision on whether we're going to believe it's going to move to the downside or to the upside, because that BB can shift and change. As I said, right now, we are stuck in a little bit of an area between that support and resistance, but just giving it a minute to work out and waiting for it can give you so much more information and so much value while you're waiting for that to happen. Now, let's move over to the 233 so we can discuss this one just a little bit more. Now, the 233 is going to shift the direction up and down much easier, much quicker. So if we're looking at the 233, we shifted the direction to the upside right about here. But if we let the 233 really run the show, we're going to let it run us over, because we want to be able to use this just to identify really quick entries that give us a lot lower risk than we saw through here. So we're not going to necessarily let the 233 lead the way in the decisions, but we're going to pay attention to what it says. We're not going to fight it either. We're going to pay attention to what the 233 is telling us while we're looking for the 10946 to give us the overall direction, and the 1597 to give us more of an indication of what the trade setups are. And honestly, it doesn't matter if it's the 1597 here, if it's the 610 here, whatever chart you choose to have as your middle chart needs to be your trading chart. Your other ones are to assist. So right now, my trading chart just did exactly what we talked about. It pulled right back between these areas and is looking to start making that move back to the upside. All right, so this is what I was talking about. Let it work itself out. You can see we had pulled up to the top of this band. We pulled down to the bottom of the band. Now we're starting to break through the top of the band, which does help us to anticipate the possibilities of moving up a little bit more. Now, we'd really want to see breakthrough here. And remember, the idea is if we're not really certain about what direction we anticipate at that time, wait for it to break through the area and pull back to it. Just as we see right here, break through the area, pull back to it. That's what we really want to see if we want to use some extra confirmation in order to feel confident about the direction that we're anticipating the market to move. All right, my friends, that is going to wrap it up. Don't forget to go over to responsibledaytrading.com and click that button and sign up for the scholarship, because we want to make sure that everybody has the opportunity. That scholarship happens in October, so you have some time before we close that out. There will be some information you'll need to fill out, and we really love reading what you guys have to say about yourselves every year. It's an amazing opportunity. And what even happens a lot of times is that these scholarship students end up staying here and working with us at Responsible Day Trading in order to give back to the community and help those who are looking to grow as well. All right, guys, so we're going to go ahead and close that out. I hope that everybody has a wonderful week. Once again, I am committing to being here a little more often. Like I said, I'm going to be out of town next weekend, but I'm going to bring my camera with me. And I'm going to pray for good internet, and we shall talk next week. Look out for that announcement that we're going to have on Instagram for the scholarship. And guys, as always, you know that I look forward to catching you on the profitable side.